Good evening from New York. I'm John Hayden. We have some big breaking news. Trump caught in act and loses it all in 3 months? Here's a number. Not an opinion, not a political talking point, a number pulled directly from a public financial filing that anyone can read, verify, and download from the SEC website before this video ends. $871,000. That is the total revenue generated by Trump Media, the parent company of Truth Social, in the first quarter of 2026. Against that number sits another number from the same filing, the same quarter, the same company. $45 million. That is the net loss. Now, before anyone calls this partisan, before anyone reaches for the political label that makes it easier to dismiss, ask yourself one question. If any other publicly traded company, run by any other CEO, backed by any other name, posted those numbers in a single quarter, what would the financial press call it? What would investors call it? What would the board call it? Hold that answer, because this script is not about politics, it is about a pattern. And the pattern is documented, public, and 3 months deep. The contrast between what has been said and what the filings show is not subtle. It does not require interpretation. It sits in plain sight for anyone willing to look past the press release and read the actual document. Trump has spent years pointing to the Dow, the S&P, the market, his deal-making record, using the language of financial mastery as a personal brand. His own company's stock tells a different story. When Trump Media announced it would go public through a special purpose acquisition company, it was trading at approximately $100 per share. Today, it sits at $8.93, below the standard $10 SPAC floor that even the most modest blank check companies maintain at launch. But the stock price is not even the most significant number in the filing. The crypto holdings are. Trump Media acquired cryptocurrency assets with a cost basis of $1.131 billion. Today, those holdings are worth $766 million. That is not a rounding error. That is a $365 million loss sitting on the balance sheet of a company that simultaneously reported less than $900,000 in actual operating revenue. This is not bad luck. This is a method. And once you see the method, you cannot unsee it. The method has 3 steps. Watch how cleanly they apply across 3 completely separate ventures in the last 12 months alone. Step 1. Announce with maximum fanfare. Step 2. Collect what can be collected. Step 3. Let the fine print handle the rest. Trump Media announced a merger with a nuclear fusion company called TAE Technologies, framing a $45 million quarterly loss as a bold pivot toward energy innovation. The announcement generated headlines. The stock moved. The fine print noted that the merger remains pending, unguaranteed, and subject to conditions that may never be satisfied. The T1 Trump phone was announced with equal fanfare. A premium, American-made smartphone at $499, launching August 2025, designed and manufactured on American soil. Pre-orders were collected, deposits were taken. August 2025 came and went. Today, the terms and conditions page, dated April 2026, reads as follows. And these are the actual words. A pre-order deposit does not constitute acceptance of an offer, does not create a contract for sale, does not allocate or reserve specific inventory, and does not guarantee that a device will be produced or made available to purchase. Trump Mobile will not be responsible for failure to release a device. They are not guaranteeing they will commence production. They collected the deposits anyway. Then there is the gold card. $5 million for an expedited path to American citizenship, 50,000 buyers projected, trillions of dollars promised. Howard Lutnick testified under oath before Congress. The documented result? 1 gold card has been fully processed. 1, not 50,000, 1. 3 ventures, 3 identical steps, one fingerprint. What makes the fingerprint undeniable is that it is not new. Trump's own SEC filings, documents he is legally required to file with accuracy under penalty of federal law, list his previous business failures as material risk disclosures for current investors. Read that sentence again. His own filings warn his own investors using his own history. Trump Magazine, defunct. Trump Vodka, defunct. Trump Airlines, defunct. Trump Steaks, defunct. Trump Mortgage, defunct. Trump University, dissolved by court order and a $25 million settlement. Trump Taj Mahal, Chapter 11 bankruptcy in 1991. Trump Plaza, Trump Castle, and the Plaza Hotel, all Chapter 11 in 1992. Trump Hotels and Casino Resorts, Chapter 11 in 2004. Trump Entertainment Resorts, Chapter 11 again in 2009. He is not hiding this history. He is legally disclosing it. Which means the question is not whether the pattern exists. The question is why anyone is surprised when it repeats. Now, here is the part that sounds like satire, but is sourced from a New York Times investigation. A $6.9 million federal contract, no competitive bidding, no open tender process, no prior federal contracting experience required, was awarded to the company that designed the swimming pool at Donald Trump's personal golf club in Virginia. The contract was to paint the National Mall's reflecting pool blue. The company is called Atlantic Industrial Coatings. Their primary qualification appears to be that Trump likes their pool work. Experts quoted in the Times noted that painting the reflecting pool blue will not solve its chronic algae problem. It will likely make the algae more visible. They also noted that driving a presidential motorcade across the newly prepared concrete surface, which Trump did the same week, may have damaged the very joints the restoration was meant to protect. This would be merely absurd if it existed in isolation. It does not exist in isolation. Trump's sons are backing a drone company that just won an undisclosed Air Force contract. Don Jr. recently rang the opening bell at the New York Stock Exchange for a gun company going public, as the administration's Justice Department simultaneously argued a R-15S should be more widely available. Kushner's investment vehicles have received billions from foreign sovereign wealth funds since 2021. The pool is not the story. The pool is the proof of concept. If the method works at $6.9 million, the question is what it looks like at $6.9 billion. Which brings us to the 3 months that this video's title references. Because the argument that this script has been building toward is not that Trump Media is a poorly run company. It is that the operating method visible in Trump Media, the Trump phone, the gold card, the pool contract, the drone deals, and the bankruptcy museum, is the same operating method visible in 3 months of governance. Announce boldly, promise everything, collect what can be collected up front, let the fine print, the executive order, or the press release manage the gap between promise and delivery. The Iran conflict was announced with the language of overwhelming force and inevitable victory, a product launch with no delivery timeline, no defined metric of success, and no clear exit terms. The economic strategy has been managed with the volatility of a poorly hedged crypto portfolio, dramatic announcements, market reactions, corrections, and press releases declaring victory regardless of outcome. The 3 months have produced 3,500-word analyses in the Financial Times, currency movements, polling shifts, and a pattern so consistent across so many categories that calling it a coincidence requires more faith than calling it a system. So here is the question this video wants to leave you with, and it is not a partisan question. It is a managerial one. What do we call an organization that consistently announces more than it delivers, collects value before delivering it, and writes terms that protect itself from accountability when delivery fails? In the private sector, we have several words for it. In the public sector, the stakes are higher because the deposit is not $499. The deposit is public trust, public money, and public institutions. The difference between a company that fails and a company that extracts is simple. When a failing company collapses, the people who built it lose their investment too. When an extracting operation winds down, the principals have already moved on to the next announcement. The filing is public. The pattern is documented. The receipts are all there. The only question left is who is paying attention and what they plan to do about it. If this video gave you something to think about, subscribe and turn on notifications. This story has more chapters coming. Hey, thanks for tuning in. If you enjoyed this video, don't forget to hit that like button and leave a comment. A really positive, nice, and kind comment. That would be appreciated. And if you're not already subscribed to our channel, make sure to subscribe and turn on notifications so you don't miss any of our daily updates.